Let's talk about this Naira at over 160 Naira to the dollar. Still a lot of pressure that the currency is feeling despite new regulatory measures around the currency. Your views?
Yeah, thanks, Lerato, for having me. Indeed, Naira has been under tremendous level of pressure. Of course, if you look at what is happening at the primary window, you could see that cumulatively, demand has consistently outstripped supply. If you look at it week on week, cumulatively demand has totaled about 1.1 billion. If you look at it from Monday up until yesterday, and then only with a supply of about 700 million. So that gives you an average supply of just over 200 million against an average demand of about 400 million. Of course, the shortfall of unmet demand will naturally filter into the interbank market. And of course, the story has always been the same, as the tremendous pressure are going to be seen on the prices in the secondary market.
What does all of this mean for the interbank market in terms of parity of rates, in terms of demand at the CBN window?
Yeah, just like I said, the shortfall of unmet demand has filtered into the interbank market, or unmet demand, and naturally what it means is that unmet demand will definitely drive pressure on the demand market, and what we're going to see is that we have a lot more bullish interest on the interbank forex window. And what we have seen last week on week, we didn't see any form of intervention, and that's why we saw interbank market trading on 159 levels all through to 160. Yesterday and today alone, interbank has Naira has lost 1 Naira already, and of course because of the same pressure, and we see this continuing in the coming weeks.
All right, let's talk about bond yields in this current cycle. We have been told that despite what's happening in the markets, Nigerian bonds remained very, very attractive.
Yes, it still remains very attractive. But if you look at the trend of what happened last week and then this week, last week immediately after the MPC outcome, we saw a predominantly bearish interest on the bond market. We saw yield inching down significantly between 100 to 300 basis points, especially on the 20-year bond and, of course, the short tenor. What we saw was a result of people, or investors, or players who had earlier taken speculative short positions in anticipation of a rise in yield. If you remember, the indication that most players had was that MPR was going to be hiked. But apparently, the dovish outcome from the MPC meeting necessitated people yesterday to begin to buy back, to cover the existing short position. And that's why we saw a rebound yesterday, where yields are gradually inching up from what we saw the previous week.
What are we likely to see by way of trends on the fixed income side of the market going forward? Because that will also be an indicator of confidence, and that will also probably stimulate the issuances of new bonds from other sources into the market. Yeah,
mixed trading interest, I believe. Like we said, right now, currently what we're seeing some tightness in the money market. And of course, you expect players to want to ease up cash or ease up liquidity to take advantage of what's happening in the money market. The high yields we're seeing in the money market. So you expect players to continue to go bearish. But at the same time, you expect the major players in long-term bonds, such as the PFAs, who still find this yield attractive, and who still also go for long-term bonds at this yield. So you're going to be seeing mixed trading interest. Like what we saw today, we saw much marginal change in yields owing to mixed trading interest.
Let's talk about the exchange rate again, because we have seen inflation tick up, so the costs might rise in doing business in Nigeria going forward. The decision to move the Naira to 155, give or take 3%, everybody says was a good decision, but we're already seeing it over 160 Naira. It's already starting to breach even that band.
You know, of course, if you look at plus or minus 3% on 155, what it tells you that the upper cap, it's going to peak at 159.65. That's close to 160. And then the lower cap is going to peak at 150.35. We're still hovering within this band. And of course, the reasons why those decisions were reached are not far-fetched. Both internal and external economic fundamentals did not support our earlier stance of where the earlier midpoint was at 150. CBN has come to acknowledge that the global economic crisis and, of course, the overall impact it's going to have on consumer demand with respect to crude, Of course, you know that product is the heart and soul of the average Nigerian economy. And of course, if you're looking at that and looking at what the future outlook on what oil prices will be, so you'd expect, the decision that was reached wasn't far-fetched at all.
Okay, and a final one, still on the Naira, but even on bonds. I mean, the decisions that were taken is because the CBN has indicated that it's not prepared to defend the Naira at all cost. That resolution will have to be tested in coming weeks. But for investors looking, they want to see that interest rates are higher than inflation. They want to see that the Naira is stable, even if at a higher rate. All of these variables, together with the oil price and things that you're talking about, will have a great bearing on how investors view Nigeria. What do you think that view is going to be?
Yeah, of course, the earlier stance before the last MPC has been positive rate on return on investors' funds. CBN had fully taken into consideration the inflationary threat that faces the Nigerian economy, and that has accounted for the prior hikes in MPR just to accommodate this. But if you look at the view he took at the last MPC meeting, he took a very neutral stance, letting us know the moderate impact that inflationary threat has had on the economy, and that is why he took a dovish stance on the MPR, leaving MPR steady at 12%. And of course, like I said earlier, that will still keep yield on securities, for instance, still on the high. Inflationary threats are still not away from what we see, because looking at what the depreciation has just caused, what it has caused was imported inflation. And of course, you can't rule that out.